So if you guys were interested, there is a longer version which also covers some customs duty issues on our website, which goes on for I think about an hour or so. But anyway, without further ado, if you could move the slide on, Rachel, thank you. I'm going to very briefly, and apologies for those that this affects, cover the changes to services, only because the changes for goods are more complicated. But this slide covers what's happening with services. For those of you who supply services online, perhaps together with goods or separately, or on their own, I should say, then there was already a one-stop shop VAT regime in place for electronically supplied services, digital downloads, certain supplies of e-publications, certain supplies of training if it was done without human intervention, those sorts of things. That was already in place while we were still members of the EU, to allow one return to be filed for VAT that was due in all member states of the EU. That from the 1st of July has been extended. And as the slide indicates, there are things now that clearly aren't electronically supplied services that nevertheless can be dealt with through the one-stop shop regime. So for businesses now in the UK, which of course is no longer in the EU, you can register for VAT in any member state of the EU to account for VAT on electronically supplied services and any other services supplied B2C to customers within the EU. And you have free choice on which member state to register in. And I would suggest that the best place is probably going to be Ireland, because the VAT regime is very similar to the UK, because obviously English is the first language, although in the Netherlands it's also possible very easily to conduct your business needs in English with the tax administration. But that's now a requirement, extended requirement from the 1st of July. Next slide, please, Rachel. Just click on. So this next section covers supplies of goods from a warehouse based within the EU. So in simple terms, you're selling goods to your customers, but you're fulfilling them from an EU-based warehouse. Start with a definition of distance sales, because there is a generic definition which I think it helps to have in mind as we go through this. So a distance sale is a supply of goods that you are responsible for dispatching to your customer. And that customer needs to be a, as the phrase goes, non-taxable person, which 95% of the time would be the likes of you and me, a private consumer, but can cover some other types of non-business buyers of goods and services, but probably simplest to focus on B2C supplies. And a distance sale, because it's a generic term, can happen from an EU or a non-EU warehouse. Whilst this section covers supplies of goods that start their journey within the EU, a distance sale can happen in either case. Next slide, please, Rachel. Because this is a curtailed presentation, what I've taken out, because it's frankly no longer relevant, except to compare and contrast, I suppose, is what the rules were up to the 30th of June within the EU. Some of you may have been affected by the distance selling VAT regime within the EU up to the end of December when we left. All of that has now gone. So if you have goods within the EU and you're selling them to customers within the EU, what you will no longer have is a series of individual VAT registrations depending on the level of sales to each EU member state. What you will have, and I'll come on to the second part of the slide, what you will have is a single should say one-stop shop registration by reference to the place in which the warehouse is based. So let's say it's a Dutch warehouse, 3PL warehouse. I'm not talking here about marketplaces, just to mention there is a section of marketplaces coming up. So these are sales by you from your website. Should make that clear. Then you fill in one return, but that return conceptually, without having a copy in front of us, imagine that it has 27 boxes on it, 26 of which would be relevant, which will cover the distant sales of goods from your 3PL Dutch warehouse to customers based elsewhere within the EU, but not in the Netherlands. And you would account for the sales that you've made by reference to the place where the customer takes delivery at the relevant VAT rate for that member state of the EU. And although most VAT rates hover around the 20–22%, there is a range in the EU between 17% at the lowest up to 27% at the highest. So you can see that this starts to impact pricing, and we'll come back to that once we've covered the basics, because clearly there's an issue there in the way in which you price the goods that you sell in this way from a warehouse within the EU. I've mentioned an exception there for most businesses serious about doing business within the EU. I'm guessing this wouldn't be much help, but if you have imagine the 3PL warehouse in the Netherlands and you're selling from there, if the total value of your sales of goods does not exceed €10,000 in a year, and that's throughout the EU, not per country, then you just account for VAT by reference to the country in which the 3PL warehouse is based. But it's not a very significant limit, and I think deliberately so. The intention behind these changes, I suppose, is twofold. One, it's to deal with the VAT gap in the EU, which is perceived to be several £billion worth of VAT not collected on electronic sales of e-commerce sales of goods from businesses outside the EU. And it's also from the concept of how VAT should work, it's always been the intention of the European Commission to move taxation from the point of production to the point of consumption, because that's the nature of an indirect tax, and this achieves that. Next slide, please, Rachel. So a summary slide, and just if it helps, a graphical representation of what I've been talking about. So we've got that looks like it's in the Netherlands. If I'm not sure if mine are, it looks like Germany, actually. Go for Germany. We've got an EU warehouse in Germany and sales to France, to Spain, and to Italy, and what probably is Austria. Might be Hungary. My geography is rubbish. And we'll have VAT rates at the Spanish, the French, German for the domestic sales, Italian VAT for the Italian VAT sales, etc. And the concept there of you having your stock and selling it to your customer and being responsible, of course, for delivery. You would declare that on your one-stop shop return filed in the EU country of dispatch. A couple of points there on the right to mention. No invoice obligation, which is a change. You don't have to issue an invoice. If you do, you have to use the rules for the member state in which you're registered for the one-stop shop. So in this case, Germany. Next slide, please, Rachel. One point to mention, because it's different from what we'll come on to in relation to fulfillment from outside the EU, The one-stop shop system covers all sales, whether or not, and we'll come on to the relevance of 150 euros, they're above or below 150 euros in value, sales value. As I've mentioned, you register for a one-stop shop in the EU country of, well, actually establishment, if that's where you're established. And so you have a branch in the Netherlands, would be the case there actually. And otherwise in the place where the dispatch of goods begins, and I do have one or two clients that have warehouses in more than one EU country, you pick. If you've got a warehouse in France, in the Netherlands, and perhaps in Ireland, if that's a significant territory for you, and obviously on the other side of the EU, then you can pick any one of those three countries in which to register for the one-stop shop. But when you've picked that, that's the place in which you account for all one-stop shop sales. Probably that's enough on that. So yeah, next slide, please, Rachel. I've mentioned the fact that you do not have to issue an invoice to your customers. If you do issue an invoice, as I've said, it needs to comply with the rules in which you're registered for the one-stop shop. So not the rules in which your customers are based, because obviously in that case, you could have up to 26 different invoice templates for all of the distance sales that you're making, which would be, well, impossible to deal with. So at least you've only got one. Next slide, please, Rachel. So a summary of the advantages and disadvantages, I guess. EU market at your feet. Sounds a very grand statement to make, but this is a simpler outcome than the distance selling regime that was in place before, in that you will only ever have, if you have stock in the EU, you will only ever have one registration in which to deal with those sales. Therefore, your costs should be coming down. You don't have to issue invoices. And it can also, this one registration can deal with multiple warehouse locations, as I've mentioned. There are some significant disadvantages. Some of you may, depending on the way in which you do business and where you hold stock, have already been dealing with the changes that came into the UK on the 1st of January. If you hold stock outside the UK, or if it's sold through a UK marketplace, Amazon, for example. Unlike that system, this has no basis on which to recover VAT. The one-stop shop return is just to pay VAT. So if you have local warehouse costs, or you have import VAT on the bulk shipment of goods into your 3PL in the Netherlands, you can't use it to get that VAT back. There are other ways we'll come on to in which that can be recovered. You've also got, and I mentioned the range from 17 to 27%, you've got multiple rates. So you've got multiple price points potentially, because if the base sales price of your goods before working out what the VAT rate would be is €100, then you've got potentially a fully costed sales price, including the VAT you have to deal with, of 117 to 127. So you've got a question then of, well, how do I price those goods on my website? Putting aside here again, this is not talking about marketplaces for the moment. You also have a VAT registration obligation. I was at pains a few minutes ago to mention 26 countries with your 3PL in the Netherlands. For sales domestically in the Netherlands, you're going to need a Dutch VAT registration. So if your warehouse, which is likely, you've put it there for logistical reasons, but also perhaps because that's an important country for you for sales to customers, you're going to have to deal with two registrations, in fact, one for your one-stop shop, one for local sales. And you also have to keep your records for 10 years. I'm not entirely sure why 10. I assume there are some member states in which that's required and have just gone for the longest. But yes, 10-year record retention obligation, which can be quite challenging, I'd imagine, as time goes on. Next slide, please, Rachel. And so this is dealing with e-commerce from a non-EU warehouse. So if we could just click on, thanks, Rachel. A few things to mention, like the UK, but later. So 1 July, not 1 January, the low value consignment relief, low value exemption of 22 euros, which was £15 in the UK, that's gone. So you can't ship low value goods without having an obligation in relation to VAT. The IOSS, Import One Stop Shop scheme, only deals with some sales of goods, and I'll come on to the sum in a sec. There is also, if you don't want to register for the Import One Stop Shop, because also to bear in mind now and come back and go through it again in a few minutes, what the IOS is an optional administrative easement on your normal obligations. You don't have to have an IOS registration. There is, as the third bullet point mentions, there's a special system, and some of you may have seen a whole host of different offers out there in relation to postal operators and couriers offering to deal with that for you. Partnerships springing up. I think one, for example, Royal Mail and Deloitte, I think it is one of the big four accountancy firms, are working together to provide you with a facilitation measure so that you don't have to deal with an IOS registration yourselves. There are some caveats to how that works. It's a perfectly good offer. I'm not trying to say it doesn't work, but there are a few limitations to one particular limitation worth mentioning, which I'll come on to. And probably lost in the background noise in a way, IOS is optional. So is the special scheme for postal operators and couriers. You can, and I've got one client going for this, we'll see whether or not it works for him. He's just going to ship them, because if the default, if you sort of fall through all of the options, the default is this just continues to be a normal export from the UK with no UK VAT, import into the EU with relevant import taxes depending on the EU country that the shipment goes to. In that situation, the customer would have to pick up the costs. So clearly that can be quite a barrier, unless, and this particular client is in a very niche market that they think isn't susceptible to challenges from customers who end up with the postman or equivalent knocking on the door and asking for payment of VAT and duty before they'll hand over the goods. But that is still an option that's out there. So next slide, please, Rachel. So a summary of IOS. It's worth stepping through each of these bullet points. It's available for goods sold to consumers, not businesses. The package is shipped from outside the EU to the EU. We're focused on the UK, I suppose, but I've got clients that hold stock in the Far East that they ship direct to EU customers. It would equally apply to that. And if you're a business, and bear in mind, I'm still not talking about marketplaces, and we'll get to them shortly. So this is your own website still. If you hold stock in the UK, but you also hold stock in the Far East, let's say, and you fulfill from both locations, your IOS registration, that's how you deal with this, can deal with both of those on the one IOS. I mentioned on the last slide that there are limitations, but this is the limitation, the value of the consignment, and consignment, not the individual sale. So if I buy 3 things from your website for 60 euros each, you couldn't use IOS because the total value of the consignment would be 180. So the value of the consignment does not exceed 150. And that 150 valuation excludes freight transport costs unless you don't separate them out, logically enough. It doesn't deal with excisable goods, so tobacco, alcohol being the obvious ones. That doesn't help with this. You can't use IOS for that. And normal rules would still apply, as they did do until the 30th of June. iOS can be used by both EU and non-EU businesses. So much like the UK scheme, I suppose, if an EU business holds stock outside the EU and fulfills directly from there, it would need an iOS number. I probably shouldn't call it an iOS VAT number, actually. It's slightly misleading because it's not really a VAT number. And if you are not established in the EU, so I'm guessing quite a lot of you listening to this presentation, you need to appoint, an EU intermediary, which is a person willing to be jointly and severally liable for the taxes that you owe. Because in the event that you don't pay, the local tax authorities have a person based within the EU to pursue for payment of the tax that's due. It's worth going back to the penultimate bullet point for one more comment that's not on the slide, which is once you've got your iOS number, if you do register or have already registered, be careful. Don't give it to anybody that doesn't absolutely need it. So in simple terms, just give it to the intermediary that's filing returns on your behalf, because actually it's a pretty valuable number. It would allow fraudsters to use your iOS number, put it on their parcels so that they could send goods to their EU customers without paying any taxes at all, and then leaving you liable because that package shipped to the EU bearing your identification number. So it's an important number to keep to yourself. And like the one-stop shop, you can't recover VAT on your iOS return. And this is the point at which I can cover off how you would do that. If you're registered for VAT in the one-stop shop, which we talked about a few minutes ago, because you hold stock in the EU and you're making domestic sales and therefore have registered for Dutch VAT for the Dutch sales from your Dutch 3PL, then any VAT you incur, Dutch VAT, you incur on importing goods in bulk into the warehouse or on local warehouse costs, you would recover on your Dutch VAT return. If you incur input VAT on your iOS shipments, whatever that input VAT might be, you have to file a refund request as a non-resident entrepreneur, which is, for those who've heard of it, it's called the 13th Directive. But basically, there are reciprocal rules between the UK and the EU now, which allow UK businesses to recover EU VAT and EU businesses to recover UK VAT. And there's a process and to follow to get that VAT refunded. Next slide, please, Rachel. So to summarize, this is an ability to, as the slide says, fast track goods at customs because they don't get held up for payment of import taxes up to the €150. The UK Co, I've used the Netherlands here as an example, registers for the one-stop shop via a Dutch representative, the intermediary I mentioned. Could equally be Ireland. I'd say Ireland and the Netherlands are probably the most logical, simplest, and also quickest places to get your registration sorted out. That representative is liable together with you for the taxes that are due across the EU. Like the one-stop shop, the import one-stop shop reports all sales within the EU to all 27 member states from the warehouse, in this case, let's say in the UK. And that's probably enough on that slide, I think, conscious of time. So yeah, if you could click on, Rachel, thanks. The fallback scheme I've mentioned. This allows, so pick the Royal Mail, Deloitte tie-up, where Deloitte deal with the reporting obligations for you, and Royal Mail are the courier. Then this allows Royal Mail to collect and pay over via the Deloitte tie-up the taxes that are due at import. This is sort of the first step towards this being a normal import, because this arrangement does require the payment of import VAT to get the goods cross-border. But there's a facilitation to me, which means, let's see how it works in practice, I suppose, since we're only 6 days in, which is supposed to mean this happens quickly and seamlessly. And there's a monthly payment of that import VAT, with the assumption, although it's not explicit on this slide, that those taxes are charged back to you as the vendor. The limitation I mentioned a few minutes ago, there is a significant limitation to this. Unlike the IOS, where you have one registration in one place, probably in Ireland or the Netherlands, and you report all of your taxes from that one location, this only works point to point. So if you've got a UK warehouse and you're sending goods to the Netherlands, it will work as long as the Netherlands is the final destination of that shipment. So if you're intending, for example, I think this would be the case, to break bulk in a particular EU country and send the goods out from there, so DHL Deutsche Post kind of thing, as I understand it, they do that. This won't work, because the likelihood is all of those goods individually labeled, all those consignments individually labeled in a large movement of goods that are broken up in the German postal system and sent on their way, might be going to Switzerland, to Austria, to Belgium, to the Netherlands, to France. This is only point to point. Now, that might still work, but it does probably mean you need to pick one or two couriers and really understand what they're doing for you and where they're sending goods to for this to work. Next slide, please, Rachel. And so a summary again of this, just to make sure we've covered all of the points. The postal operator or the courier reports and pays the import VAT due and recharges these costs, it should say, back to you as the supplier. Again, only up to 150 euros. And as I've mentioned, limited to customers in the import country. So may or may not work depending on how you decide to ship goods. Next slide, please, Rachel. And as I mentioned before, you can the regular rules can still work as they did up to the 30th of June. And they must work if you fulfill from a non-EU warehouse and the value is over 150 euro, because the import one-stop shop can't pick that up. I mentioned what might feel like a lifetime ago now in all of the detail. The one-stop shop for goods you hold within the EU deals with all sales above and below 150 euro. All sales therefore go on the one-stop shop return, so life is simpler. For import one-stop shop, for goods coming from outside the EU, if the value of the consignment, and remember the point I made about the three things in one consignment at 60 euro each, that's a consignment of 180 euro. Normal rules apply. So we're back to, for those familiar with it, all of the Incoterms type discussions about, am I sending delivered duty paid? Does that mean I need to register for VAT in the country in which my customer is based? Do I even want to get into doing that? All of those types of considerations. But for values up to 150 euro, you can just send the goods and leave it up to your customer to deal with the import at the other end and pay the taxes when the goods arrive. It doesn't feel very attractive to me, and I have to say I only have, as I mentioned, one client who's considering that as an option and feels that it's at least worth seeing how it might play out. Next slide, please, Rachel. So marketplaces, long been trailed. Next slide, please, Rachel. And there's actually only one slide when we get to it, because in a way the rules are quite straightforward conceptually. There's lots of devil in the detail. So this is a situation, and I imagine quite a few of you have sales which you make potentially via your own website and sales which you make on one or more marketplace. Let's go for the simple end of things, I suppose. You're only selling on Amazon and you are the vendor. You're not, I think it's called vendor central with Amazon, if that's the right phrase. So it's a sale by you to your customer, but facilitated by the Amazon platform. So this covers either B2C sales within the EU. So goods held in a probably Amazon fulfillment center in a number of different member states, depending on where the customer is based. So if the stock is already within the EU, you've shipped it there, you were the importer, so therefore you've paid import VAT, let's say in Germany, because I understand that's one of the largest or the largest fulfillment center. The sales that are then made in Germany to either German customers or Austrian, French, etc., the responsibility for paying that VAT is now on Amazon, not you. So you might expect, or I assume will be expecting to receive a lower amount of money from Amazon after they've deducted not only their own charges, but also the VAT that's due. And again, by reference to between 17 and 27% VAT. I've covered, or I've probably skipped a bullet point I shouldn't have done. I've covered sales within the EU. Also, this covers B2C sales from goods imported into the EU in individual consignments, unlike the bulk shipment into the EU I mentioned on the first bullet point. But again, only up to €150. Above 150, if your goods are sold on the Amazon platform, but the sale is €200, that won't be dealt with this way. So you're going to have to compartmentalize your business into lots of different pots, depending on the value, depending on where the warehouse is based, depending on whether or not it's on a marketplace or your own website. The platform, as the final bit says, is deemed to have received and supplied those goods itself, even though contractually, commercially, that's not the case. That's the pretense from a VAT perspective. You perform a B2B supply of goods to the platform. I can't remember, so I'll mention it here in case it's not on the next slide. To go back to that bulk shipment of goods to the Amazon fulfillment center in Germany, you've got a chunk of import VAT to recover. Again, back to what I mentioned about non-EU businesses seeking refunds of VAT from the local tax authorities. To mention that process, although it's in place and been in place for years, it's really variable how long it takes to get that VAT back. Without being too broad brush, some countries are much quicker than others at giving you your VAT back. Excuse me. Next slide, please, Rachel. Action required. So we're on the final hurdle. As I just mentioned, it's really important to analyze the flow of goods and determine the VAT consequences of those movements. So who am I selling through? Is it a marketplace or not? Is it my own website or not? Where are the goods when they begin their dispatch to the customer? What is their value? All really critical questions now. And if, let's say, you're a business that makes B2C supplies of services and goods, and from warehouses both within and outside the EU, it is perfectly possible that you could have a one-stop shop registration for your services, a one-stop shop registration for the warehouse within the EU, an import one-stop shop for the warehouse outside the EU, and still have normal imports for those goods above €150. So having used the phrase, this opens up the EU market to you earlier, that comes with quite a lot of conditions. And still, this seems to be pushing us towards having a base within the EU, not necessarily a branch or subsidiary, but some sort of warehouse fulfillment, 3PL or your own. Register for the schemes now, there is very little flexibility to backdate. I think from memory, the first return is due on the import one-stop shop in early mid-August. If you haven't got your registration in place to take effect from the 1st of July by then, you cannot backdate. Some of you may have experienced over the years in the UK, you can backdate a VAT registration if you neglected to keep an eye on your turnover and breached the threshold, say, a year ago, there's no concept of that for this. And if you don't register for one of the schemes, you're then caught by the fallback position of potentially having to register for VAT in multiple member states, at least until you get the right scheme set up going forward. And do remember, you've got a commercial driver of what do I sell my goods for, given I've got multiple rates across the EU, depending on the goods I'm selling. And I suppose for some of you, it isn't just a matter of 17 to 27% being the standard rate, because it may be that some of the things you're selling are at lower rates of VAT. Next slide, please, Rachel. There's a picture of me and my contact details. And I've included a link to our Brexit hub, because there are some information sheets which cover quite a lot of what I've mentioned today you might find helpful. So thank you for listening.
Wonderful. Thank you so much for that, Jonathan. That was really insightful. And I think it was a really great breakdown of between selling services versus goods versus e-commerce and marketplace. I think you covered off a lot for us there, and I hope that the viewers found it very helpful. I do have a couple of questions for you, if that's all right.
Yeah, sure.
So I will start with one from Mig, who says, just looked up that DDU would force the country to ask the consumer to cover the duties. If they don't pay it, it gets returned to you if you're a small e-commerce business.
So DDU, delivered duty unpaid, which typically these days, the terminology's changed. It's now DAP, so delivered at place. What the questioner said is absolutely right. It means that the customer is the importer, not you as the vendor. You've got a couple of choices in the way in which you deal with that shipment. What quite a lot of my clients have done is set the shipment up that way so that they don't end up with a local registration obligation in the country in which the customer is based. So they're not, because they're not the importer, but they've asked the fast parcel operator to charge the import cost back to them as the vendor, so that the price that's paid on the website is the price the customer pays. So it's fully loaded with import costs. So as the buyer, if I've paid €100 for whatever it is I'm buying, I know I don't have to pay any more. And perhaps to use an example, I bought the chair I'm sat on in my home office, and it turned out it was shipped to me from a vendor based in the Republic of Ireland. And so I made sure that the price I was paying on the website before I agreed to the sale was the price I was paying, and I wasn't going to get hit with anything when the thing arrived, which they confirmed for me, because it may not have been the case, as your questioner said. I mean, it depends on how you set things up. You could, as an alternative, get the fast parcel operator to just collect the taxes from the customer. And if the customer doesn't pay them, well, the import will be rejected, as he said, and the shipment will be sent back.
Wonderful. Thank you for that. I have another question here from Mark, who says, if you are not VAT registered in the UK, does it involve you?
Yes. Yes, it does. A VAT registration, if you're not VAT registered in the UK, the reason I paused, I suppose, is it probably means the business is in, let's say, startup mode, it's growing, but you've not reached a level in the UK yet where you need to be registered for VAT, and that's 85,000 a year is the current threshold in the UK. Your sales from out to customers outside the UK won't carry UK VAT, so it won't affect anything from that perspective. But there is no, for the import one-stop shop, I mentioned that €10,000 threshold for goods within the EU. The question highlights something I didn't mention, which is there is no threshold for the import one-stop shop. So as soon as you send anything into the EU, you're going to have to make one of those four choices I mentioned on the slide I went through. Either you register for the import one-stop shop, you use three choices, I suppose. You use the fallback scheme with the courier or Royal Mail, or you get your customer just to pick up the costs. So thinking that through, it will affect you, but you could take the decision that you'll let your customer pick up the import taxes and see whether or not that works for your business. If it does, because you've got a product that, let's say you've got a good market, a niche in your particular market, and you don't have much competition, it may be that even if you make it clear on your website that you the customer will have to pick up the taxes, that it's not damaging your business, well, do that. But you need to think it through. You need to come up with a methodology that works for your business.
Yeah, definitely needs to come up with a plan for how you're going to tackle it, don't you?
Yeah.
Yeah. Okay.
Yeah, it is really important.
We do have one final question from Doug, and I think you just touched upon it in your last answer, but he says, assuming under the £85,000 turnover in the UK for not VAT registered, if you go over the €10,000 threshold in any EU country or across the whole of the EU, do you have to use IOSS or register with an OSS in a specific country?
Yeah. There is so much to take on board, isn't there? So the one thing the questioner didn't include in his summary or her summary was, where are the goods? I'm going to assume they're in the UK. It sounded like they were. If the goods are in the UK when they're sold to the customer, the one-stop shop's not relevant because that only covers goods already in the EU when the sale takes place. So we're dealing here with potentially the import one-stop shop. Therefore, the €10,000 limit isn't relevant because that again only covers goods within the EU. And it's back to the same answer as the previous answer I gave, which is, am I going to go for the import one-stop shop? Am I going to use one of the fast parcel or postal service facilitation measures like the Royal Mail and Deloitte tie-up? Or am I just going to ship and let my customer pick up the costs at the other end? And they are your choices. Because I would suggest at that level, it's not going to be viable to end up with a 3PL warehouse in the EU because the costs would be too prohibitive at that stage of your business.
Perfect. Thank you so much. If you do have any more questions on this, you can pop them in the comments. Maybe Jonathan will try and get back to you if you can.
Yeah, sure.
Thank you very much for joining me today, Jonathan. It's been very insightful, very useful. I appreciate it very much.
Okay.
I hope everybody else has enjoyed it as well. And if you do have any questions, let us know. But if not, we will see you in our next live next month. Enjoy.
Bye, everyone.
Goodbye.